Hello and welcome to this week's trading strategy video with me, David Jones, and Trading 212. Now, we've covered quite a lot, I think, in recent weeks. We've looked at price action, oscillators, moving averages, breakouts, false breakouts, all this sort of stuff. So I thought this week would be a good opportunity to maybe just pause a little bit and look at what are some pretty common trading mistakes. And when it comes to trading mistakes, you can make a really long list, but I thought for the purposes of this, because it's going to be a short video and people just don't have the attention span these days, let's look at the top 3 trading mistakes. Let's start off. Number 1, you will have heard this before, and we're going to look at a real example from the last couple of weeks in a second. But I think one of the big problems is people cannot trade with the trend. They see a market, and there have been plenty of markets in recent weeks. The euro, oil, stock markets. They see a market that's maybe doing that or doing that. And if a market's been going up, 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 they can't seem to bring themselves to buy into that market. They always want to try and pick the top, so they're going against the major move in the market. And the same, of course, for falling markets. If a market is sliding, plenty of people are trying to pick the bottom. But what are the chances, if you have a market that's gone up for 6 months or down for 6 months, that you nail the absolute turning point? It's highly unlikely, but let's look at a real example. Let's take a look at the euro dollar, which just recently moved out to 2.5-year highs. There are so many markets we could pick at the moment when it comes to looking at trends, but let's go with euro dollar because it hit a 2.5-year high last week, and data shows that with some brokers, something like 70% of clients were selling short the euro. But you're really trading against the odds. In a trend like this, in a strong uptrend, our approach should be looking to buy the dips. If you're selling short, look at the sort of moves you're trying to catch. They're tiny moves like this. What are the chances that you're going to pick the absolute top? It's much easier to try and position yourself for maybe the next swing over the next few days, next few hours, next few weeks, whatever your time frame is. So trading with the trend really should be at the core of our approach, but it's one that so many get wrong because psychologically it's a difficult thing to do. But I think even in a trend like this, the market has gone down for one day, but has gone up in the view we're looking at here, broadly speaking, for the last 3 months. So it's much easier to identify a trend on the chart, and it's pretty clear what the trend is here, and look to trade with that trend. So there we go. We want to try and trade with the trend. Put the odds in your favour. If a market is going up over the time frame you're trading, look to be a buyer. If a market's going down, look to be a seller. I think the second, maybe more common problem is trading too big. People might open an account with, let's say, £1,000, €1,000, $1,000, whatever it is, but they risk far too much on any one trade. If they do a trade where they're risking losing 250 euros, pounds, dollars, whatever it is, it's a massive risk compared to the size of the account. And I think it's very difficult to look at a market objectively if you're in a trade, if every point the market moves against you or in your favor is a massive sum of money to you, whatever that sum of money is. So I think we need to trade at a level where we're not obsessing about every small point move in the market. So I think it's a really important part of trading. When you start off, and even if your account